What you have to understand about cap costs is that there's two components of it. There's the dollar amount, right? They're saying $60,900 cap cost and we'll approve it. But on that car, that doesn't mean that they'll approve that same amount of money on a less expensive car, because it's all relative to the value of the car. So if we went to a car that was $6,000 expensive, but it was significantly less discounted because it didn't have the EV lease cash, for example, the bank might actually like it less because the car might be 10 grand less expensive, but if its discount is 10 grand less, then ultimately they're like, this is actually much worse than the first car that you looked at. Because in this case, you're asking for $60,000 on an $83,000 car. If you're asking for $60,000 on a $70,000 car, you have to maintain that combination of big discount, but also getting it down to a loan size that they're comfortable with. So this could be a case of they've just never had a car that expensive before, and that could be part of it. It could be a case of they have shaky credit and the bank wants there to be enough of a cushion between the value of the car and the amount of money they're borrowing. For example, if we go to a GLC plug-in hybrid, that's going to be less expensive. It still has that federal lease cash on it, but it doesn't have some of the other incentives that the EVs do. The percentage of the loan size relative to the MSRP of the car is going to be higher. The bank might be okay with that, they might not be, I don't know. But it's worth a try, because the only other option would be an EQB, and we're sold out of those. We don't have one of those to offer, and they're kind of not out there all of a sudden. But GLC plug-in would be my guess.